Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, July 7th. Wall Street is trading quietly higher so far today after data from the U.S. Labor Department showed the economy created far more jobs than expected in June. This underscores labor market strength that could make the case for a third interest rate hike this year. Non-farm payrolls increased by 222,000 jobs last month, beating economists' expectations for 179,000 gain. And now let's look at three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a daily chart of the S&P 500 spider, symbol SPY. As you all know, this is the tracking stock that correlates with our S&P 500 benchmark index. Now we had an all-time closing high at June 19th at $244.66, which is about $24.46 on the S&P 500 itself. When I captured this chart today, it was trading at $241.96. As you can see from that last all-time closing high that the SPY made, it has gradually kind of stepped on the staircase a little lower here, gradually this week falling through the 20-day moving average, the red line, and today sitting just right on top of the 50-day moving average. Of course, this is a holiday week. We did have Tuesday off for July 4th, and so it's been kind of quiet, and volume has been down a little bit. So as you can see, the SPY is now sitting on the green line, the 50-day moving average, again trading at $241.96 so far today, or about $24.19 on the S&P 500 itself. All is well. The S&P is in an uptrend, as you can see by the blue trend line that I've drawn here, and that comes in here at about 240 or about 2,400 on the S&P 500. Which is we're going to consider pretty strong support, potential support is what we should call it here. And the questions are for all of our support here. Support at the 50-day moving average, which is key. The 50-day moving average is used by a lot of institutional investors and traders as well as individual traders as an intermediate term trend line. And if price falls below that, it's a very slight negative. So we're watching the 50-day moving average, which is at $241.30 right now. That is a support zone potentially. We've got our trend line, which has touched quite a few lows here, so we can call that key support at $240 or 2,400 on the S&P 500 itself. Then we can move down here and look at support, potential support that comes in at about 235, and then down here at about 232. This 2350 or 235 number you see here, close enough, is also considered to be key support for the SPY and the S&P 500. So now we watch and wait. If we look down, we see the 14-day RSI is pretty much just following price down to a mid-zone here. The MACD is moved down to its zero line with the MACD line below the signal line, very, very slight negative, and trading at the zero line right now. So these are both pretty neutral for the indicators. So what we're going to do here is if the SPY does fall below the 50-day moving average and move a little lower here, head down toward 235 in the next week or so, any new long positions I put on, especially in stocks that tend to follow the S&P 500, I will be picking very wisely and buying only very small share size with very firm stops. Now, you say, well, heck, Toni, can't the SPY bounce off the 50-day moving average and head back up toward its highs? Absolutely it can. Absolutely it can. So we're kind of at an inflection point here. We can go either way, either the good news or the news that the S&P has to rest a little, take a summer rest perhaps. So let's stay tuned and we will see what happens in the coming week. Our next chart today is the PowerShares QQQ, We talk about this a lot in Tony's Market Club. Now, I think I probably drew for you last week what we were talking about in Tony's Market Club, which is the potential top reversal pattern here known as a head and shoulders. And a head and shoulders top reversal pattern can take place when price has moved in an uptrend like the QQQ has. And of course, the PowerShares QQQ consists of the top non-financial stocks in the NASDAQ stock market. We see it's moved in a fantastic uptrend, at least for all of 2017, trading above its 50-day moving average, bouncing off of it in April. Doing a great job here, but nothing goes up forever. Markets move in cycles. So now we see that the QQQ has made what we call a head and shoulders. I'm now drawing the neckline for you, and the neckline is going to come in here right at the 50-day moving average, which is important. Now, when I captured this chart today, the QQQ was trading below the neckline and below the 50-day moving average at $137.66. Again, we can see it's come down below the support of the neckline and the 50-day moving average. And it looks like it stopped here yesterday, at least so far. It put in a little low here at 136. Today it bounced back up slightly to $137.66, as I just said. Now we see, can the QQQs come back up here? Can they push above support? Can they overcome supply from all of what I call the mad people, the people that bought up here toward the top and then found that the Qs, dropped, and then maybe they're selling just to get out even? Can the Qs push back up through all of that? And we do know that they're led by Apple, the FANG stocks, Facebook, Apple, Alphabet, and so forth. Are those stocks, and they could well be, strong enough to rally here, push back up through all of this potential supply here, and head back up toward highs, toward 145? Or does at some point here the 50-day moving average reject the Qs, and does it need to take a rest and head back down to 135, maybe 132 or so, and as we say, take a little summer rest here? So we'll find out in the coming week which of these scenarios is going to happen. Certainly some of you have got some wonderful profits, is what I meant to say, in a lot of these tech stocks, and maybe you want to take a few of them off the table if the QQQ breaks lower. Of course, it could end up being kind of a pressure on the overall market if it does head lower. Now we're going to look at our final chart for today. It's the iShares U.S. Home Construction ETF. We haven't looked at this in a long time. This is the exchange-traded fund that zeroes in mainly on the home contractors. The top components are D.R. Horton, Lennar, NVR Incorporated, Pulte Group, Toll Brothers, and Home Depot. Now, when I captured the ITB, which is the symbol, it was trading today at $34.32. And it looks very positive. It's been trading up for most of 2017 above its 50-day moving average, which I like. And if the market continues to be positive next week, I'm looking here to see if the ITB can break above, say, $34.35. If it can, this is a nice strong candle here. We've had some decent volume in the ITB lately. It doesn't seem to be minding much that the Fed's been raising interest rates. Of course, rates are still very, very low. So the ITB looks like it could possibly break out next week. If the market's up, that's a possibility. If it does so, I will probably add a small share size to my portfolio right now. Now, please be advised and know that the usual rule is in effect. If for any reason the ITB should drop lower and drop below the 50-day moving average, the green line, which is coming in here just above $33 at about $33.05, if it drops and closes below that line, I will be out of the trade. That is my protective stop, my no kidding around protective stop. Okay, so check that out next week. And now on to next week's economic reports. But first, please join us for Tony's Market Club this coming Monday, July 10th. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may be ripe for high potential trades. Probably pretty similar to the ITB, although we do talk about a wide range of sectors in Tony's Market Club. And I give you 5 different trading ideas, all with entries, protective stops, and profit targets. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. If you can't attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. Next week's economic reports, Monday and Tuesday, not much going on. On Wednesday, we have crude inventories and the Fed's beige book. Thursday, we have jobless claims and nat gas inventories. Friday, we have the CPI, or Consumer Price Index, retail sales, and the Michigan Sentiment Report. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.